Nothing says global reserve currency status like hitting a 6-year low, or so it would seem for China, which has marked the renminbi's first full day of trading since joining the International Monetary Fund's basket by fixing its currency above 6.7 renminbi to the dollar for the first time since October 2010. There are two schools of thought about the timing of this new weakness. One is that with its badge of honour from the IMF now secure, China will now let the renminbi better reflect global economics. The other says that it was simply 50-odd days since the last move lower, so it was about time. Both have meaning when reading the renminbi tea leaves. The 50-day point was observed by Citi analysts who have noticed that since the renminbi's August 2015 devaluation, it's taken Beijing 56 trading days after a renminbi weak point to allow the currency to definitively begin easing again. Last week, its current range, in place since mid-July, passed the 50-day mark. Beijing didn't have to weaken the renminbi's onshore fix as much as it did on Monday. It chose 6.7008 renminbi, down 0.34% from its levels ahead of the Golden Week break. These days, the fix is meant to reflect market moves, but analysts still believe there is a pinch of politics in the number. As a result, some had predicted a rate for Monday nearer, say, 6.68 renminbi. After all, just last week, officials in Washington were talking about the importance of stability alongside improving currency flexibility. The renminbi's fix will now be read as a signal Beijing is comfortable with more depreciation. Soft domestic inflation allows a softer currency, while a strong dollar and expectations of a US rate rise come December, they also argue for a stronger dollar and a weaker renminbi. The connection between the 50-day point and global economics is both suggest not getting too excited about the pace of any depreciation from here. Since January's turmoil, China has talked repeatedly of market stability, by which it really means no dramatic moves. Judging by the offshore rate's steady action last week, even with the PBOC on holiday, investors seem to largely accept that, and if they don't, they can just mark their calendars for the next 50-day point.